Welcome to Wine and Real Estate, the podcast where we drink wine, we have fun, and we learn about real estate investing. Real estate investing is so much more than just buying buildings. It's about building relationships, building your dreams, building your dream lifestyle, customizing your life. What do you want to do? What do you want to achieve? It's much more than money. It's more than getting rich. It's a different type of wealth. It's the wealth of time, the wealth of freedom. And now let's get to the wine and the real estate. Let's start this episode with some financing tips from our go-to mortgage broker, Streetwise Mortgages. Over to you, Dalia.
Hi, I'm Dalia, founder of Streetwise Mortgages, and in today's episode, I would like to share with you an emerging financing challenge that I have observed in the past 2 weeks. One of the things that we are seeing at the time of this recording in today's Ontario market is softening valuations for residential properties in some markets. Some clients who took on high leverage private money in the past 6 months to renovate and flip or to renovate and refinance are now experiencing challenges on exit as the after reno value of the property is lower than what they initially anticipated. Depending on how much debt was taken up front, some are seeing a shortage. That is, the refinanceable value or sellable price of the property is not sufficient to pay off all of the existing private debt attached to the property. If you are in the midst of a renovation and you have taken high leverage private mortgages or renovation loans in the past 6 months, given the softer valuations and tighter mortgage qualifications, it is crucial that you revisit your exit strategy with your mortgage advisor. Revisit your original assumptions and confirm that you will have sufficient money from the sale or the refinance to pay off the private capital. If you think you will run into a shortage, or if you are currently in that situation, we have developed a framework to help reduce the pressure of monthly holding costs that are associated with expensive debts and to reduce or cure the shortage in funds. Here are the strategies. Number 1. Depending on how large the shortage is, we can look at opportunities within your portfolio to cover the shortage through a refinance or an equity takeout. Number 2, we can look at paying off the existing private lender a portion of their funds through another cheaper private or traditional mortgage and see if any remaining shortage with that lender can be converted to a second mortgage with new terms on one or more properties within the portfolio. In the process of restructuring the debts, it is important to look at options where the collective monthly payments on the new debt are lower than the monthly payments on the previous debts. Number 3, there are lenders on the street who provide reasonably priced unsecured loans. In some cases, we can tap into these funds to pay off some of the private money debt. Lastly, combining one or more of the debt restructuring tools that I just covered with an equity strategy, where you can bring in a joint venture partner to the deal where he or she can buy into the property with a lump sum of a cash component and help qualify for cheaper financing. If you wish to discuss your best options for exiting private loans, contact our team at info@streetwisemortgages.com. Cheers to your success.
Hello, everyone. So I'm really excited. For those tuning in on video, you're going to see I'm live with actually Jay Lowe. So Jayson Lowe, not Jennifer Lopez, but unless she had some major work done, sorry, not that you're not good looking, Jayson, but anyway, there's something special about the other real J Lowe.
Oh my goodness.
So welcome, and I love to have a good laugh, so this is perfect.
Thank you.
And I'm really excited to start this this partnership with you as well. So before we came on air, I was talking about, I'll introduce you a bit better, but I was talking about financing properties outside of Canada. And that's a question I get all the time. People know I love my properties beyond Canadian borders. I think there's great possibilities, but it's hard to finance them. A lot of
Yeah.
countries, you don't have access to financing, and there's all kinds of hurdles. And then I'm like, well, what about infinite banking? And I've been talking about it for a while, and you have way longer than I have. Yeah, becoming your own banker. Then whose approval do you need? Like if you're J Lo himself or herself, depending on who you are, you don't need approval. So Jayson, can you give us a mini intro on infinite banking and who you are, the real person?
Yeah, definitely. And
Welcome.
thank you. And thank you for having me sincerely. It's it really, truly is an honor to be here. And as you mentioned with our partnership, we're incredibly excited about it as well. And we want to bring value to your community. And one of the questions that I most often get asked is, what is infinite banking? What is this process? And
Sounds very exciting and
yeah, like,
infinite.
what
I
is
mean,
that?
wow.
It sounds interesting. And the whole essence of the process of becoming your own banker, which was developed and pioneered by my late mentor, R. Nelson Nash, who wrote the book that you saw titled Becoming Your Own Banker, which has sold more than 500,000 copies, and it's self-published.
Whoa.
And so that is a remarkable achievement for a self-published book. And there's a reason it's sold so many copies, is because the process works. And for the past 15 years, we've been implementing this process in our own lives and coaching other Canadians. And the whole essence of infinite banking is to not only control the banking function as it relates to your needs personally and professionally, but it's also to recapture the interest, to recapture the money that's flowing away from you personally and flowing away from you professionally. And to be able to do that while building a warehouse of wealth that's truly indestructible. And I do mean truly indestructible. And so if you think of this from a real estate investor's point of view, a real estate investor cannot invest in real estate without ready access to capital.
Nope.
And
we're
it's
feeling the
impossible to
interest.
do. So there's one component of that equation that must be there, and it's capital. And that
Yeah.
capital must come from a supply source. There must be a reservoir that capital comes from. And when you need ready access to money to take advantage of a great real estate opportunity domestically or internationally, typically the common approach for a real estate investor is applying or seeking out joint venture capital, combination of both, so many different ways to finance a deal. But someone must perform the banking function
Yeah.
as it relates to that deal. And that someone can be you. So if you envision for a moment, like you and I were talking about before recording, if we had an opportunity to look at a property on an international scale, and we knew that there were going to be significant hurdles to getting financing, if we were in control of that function because we had ready access to a growing pool of financial value, so ready access to money on demand on our terms, that
Sounds
only
magical.
what it does is it puts you in a position of advantage because you get to capitalize on the opportunity faster than someone else.
Way faster.
I don't have to jump through all of the lengthy, nosy credit applications, verification of rental income, debt servicing ratios, qualifying parameters that you have to meet in order for a banker to check all the boxes and say, we're going to lend you capital, but we're going to lend it to you on our terms, not yours.
Yeah.
And what better way to improve or expand your real estate investing ambitions than to be the banker? And to not only be the banker, but to have total and absolute control over the repayment schedule of your own loans.
Crazy.
And so, especially in this environment, Francois, like if you think of the high inflation environment that we're in, is gaining access to capital becoming easier or more difficult?
It's tougher and tougher. You were just mentioning earlier interest rates and things. I mean, we're feeling the pinch. So now you don't have to kind of bother with that. Yes, there is interest involved in here, but you already know the parameters. Unlike right now, you could lock into a deal at 6% interest, and 2 years from now, maybe you're at 10. Like, who knows where this is going? While if you're your own banker, you set the terms from day
Totally.
one. So
And I'll tell you, for my own, going back to the time frame that I've been practicing this process personally, 15 years, I've accumulated a significant pool of financial value that just keeps increasing every day, every single day. And so when an opportunity of high caliber tracks me down, I can capitalize and take advantage of that opportunity immediately without having to go through the whole process that typically you need to do to access money from someone else's bank.
yeah.
When I'm borrowing against my own pool of financial value on my terms, I'm at an advantage, significant advantage. And here's the deal. So if you've got, ready access to a high caliber opportunity, and you need $100,000 to take advantage of that opportunity, which is going to begin cash flowing immediately, and you can request a policy loan from the life insurance company, because we utilize dividend paying participating whole life insurance as the tool that enables you to become the banker in your life. You call the insurance company, you request the loan. The only two questions you're asked are, do you want us to direct deposit the money into your account, or should we mail you a check? So now I've got money, the 100 grand. I go and close the deal. I used the life insurance company's money to close the deal. My 100 grand is still growing in my pool of financial value. So my aquarium is still rising in value every day, uninterrupted. And now I've got the life insurance company's capital that I've used to close a deal, and I have passive income flowing back to me, and I used someone else's capital to do it. And now all this money is coming back to my aquarium.
Wow.
And then I get to repeat that over and over and over again. And if you think about how peaceful and stress-free the deal process is in that example versus what most real estate investors are accustomed to, then for all of your listeners who have maybe heard the term infinite banking concepts, maybe they've heard the term becoming your own banker, maybe they feel that stress and that anxiety when they're improving or expanding their real estate investment portfolio. If you haven't read this book, first and foremost, the book titled Becoming Your Own Banker, you have an opportunity. It is a short read. You can get through it in the better part of an afternoon. Well, Francois will give you the link for people to go and gain access to that book. We're going to talk about the book that was released by my Richard Canfield and I.
Brand new,
hot, literally hot off. Ouch. Hot off the press. And this has literally been flying off the print on demand shelf.
I can imagine, because I mean, it's the same concept, but now you've applied it to, well, Canadians, first of all, and then secondly, without risk. Who wouldn't like that? So those tuning in, maybe jogging right now, can you read us the title again, Jayson?
Absolutely.
Or J-Lo?
Yeah. So the title of the book is Canadians' Guide to Wealth Building Without Risk. That's Canadians' Guide to Wealth Building Without Risk. And this was
co-authored without risk.
Without risk. That's the key. And this was co-authored by my teammate, Richard Canfield, and myself, because we also have a podcast, Wealth Without Bay Street. And we love having great conversations about improving and expanding your wealth for hardworking Canadians. And this book has literally been flying off the print on demand shelf. Like, we have sold in the first day alone, we broke 500 copies. And then it has well surpassed 1,000 copies. This was just released last week.
And that's a very niche, writing. So to sell that quickly, there's something going on.
Totally.
Obviously.
And I'll tell you, Francois, what's happening out there right now in the financial system is, if you thought you were frustrated with the banking system before inflation soared,
you haven't seen anything.
You ain't seen anything yet. And you know what's interesting? I'll share with you a real estate investor client of mine. I have to tell you this story. This is so interesting. So he had a multifamily complex in Winnipeg, and sadly, the building caught fire, and it was destroyed. The building was destroyed. And as they're going through the claims process of sorting through this, the mortgage payments are still due.
Oh yeah, it's a pain. I've dealt with fires before, and it could be
Okay.
months or even years in bad cases before you see any money.
Big time. So now, granted, this multifamily complex, this is a significant complex. So he didn't have all the capital inside of his banking system to remedy this. But what he said to me, he said, now I'm trying to sell the land that was underneath the building, and I'm not able to close a confirmed buyer to close this deal because we can't clear the mortgage off title.
Oh yeah, so now it
And
can't be financed, and
yeah, so he said, Jayson, you know what keeps me awake at night is I kick myself because I should have become my own banker sooner and I wouldn't be in this predicament right now.
he could
He could
lend
have
the money to the buyer.
big time.
Or to
So
himself or anybody.
exactly. So what I suggested to him and just talking through it to say, hey, try and get the banker to help you get this deal done. But in the event that that doesn't happen, my recommendation to him is going to be to seek out, like, to get some money to bridge the, like, get the deal done.
Yeah.
And within our becoming your own banker community, there are a ton of people that will step up and say, hey, I'd love to do a short-term, really short-term deal, but still earn some extra interest on that deal. And that's how people can help each other out. And there's no fat cat bankers involved in the process who have they have no interest in helping this guy.
No, got too much risk for them in their opinion, but now people, it's already being bought. It's just not, they're looking for cookie cutter deals.
Totally.
So this is not cookie cutter. This is a bit more complicated, but huge opportunity, as you mentioned earlier. And it's win-win for everybody. It's winner for the person that lost his building, the person buying the land, and the lender. So this is
Big
amazing,
time.
and it's all banking.
And if you think about this from a different vantage point, had we been able to eliminate the banker from the equation altogether and put him in a position where he was the banker on the deal from day one, he wouldn't be batting an eye at this, because here's the deal. When you access policy loans from the life insurance company and you're implementing becoming your own banker, those policy loans are unstructured, meaning there's no repayment schedule.
So you could skip until the insurance comes in and whatever. I mean, 6
Totally.
months, it's not ideal, but I mean, no stress.
Hey, you know what's not ideal is a building burning down.
Well, that's it. Major.
Right? But if he could have woke up the next morning and say, okay, thank goodness no tenants have been harmed, everybody's okay, everybody escaped the building, and you know what, we're going to be okay because we can work through the adjudication of this insurance claim, we can get all that done, and all the while I don't have to worry about some banker calling me and demanding payment on a mortgage on a property that's not there anymore.
Yeah.
He would have been in total control. And so what's happening with me right now and with a lot of people in our growing community is opportunities of high caliber are tracking us down because we have ready access to capital. And that's what my late mentor, he's with me every day, he's right next to me each and every day. My late mentor, R. Nelson Nash, he used to say all the time, when you have ready access to a growing pool of financial value, opportunities of high caliber will track you down.
You become a magnet. I mean, this is
there you
amazing. Go. People know, oh, Jayson's able to finance this. And then you get to pick, which is great. That's a great position. I mean, instead of whatever's left over, now you get to pick. I've been meaning to ask you, Jayson, what does R stand for in R. Nelson Nash? I tried to look him up on Google. Robert. It's always R. Nelson. Robert? I don't know. I'm very curious.
Yep.
It's Robert? Okay.
That's right.
I didn't know if it was some fancy old-fashioned name that he didn't like, so he just put a...
No, not at all. Yeah, everybody just called him Nelson.
Okay, very cool. Anyway, just a sidebar here, but...
He was... I'll tell you, for your listeners, if you have an opportunity, just head on over to nelsonnashfilm.com. That's nelsonnashfilm.com. And when you get there, you'll be able to view a documentary film that I had commissioned on Nelson. It's about an hour.
Policies.
Exactly. It was policy loans that financed the deal. And that 1 hour documentary will give you a deeper glimpse into the essence of just how remarkable Nelson was. And without Nelson, you and I wouldn't be speaking to each other today.
No.
And I feel blessed beyond the definition of good fortune to be able to educate more and more Canadians, which we've culminated thousands of Canadians coast to coast who have been implementing this in their lives. And it seems to really, really resonate in the real estate investor community for all the reasons that we just described. We want to create a peaceful, stress-free way of real estate investing, and becoming your own banker puts you in the position to do that. And it's meant to happen gradually and incrementally over a period of time, no different than growing your real estate portfolio gradually and incrementally over a period of time. We want you to control that banking function as it relates to your needs. And when you're in that position of control, what a peaceful, stress-free way of life it is financially.
It really is. And I was reading last night, funny enough, the case for IBC, Infinite
Oh,
Bank.
yeah. Great book.
And the part about from the, I think, 1950s, a lot of people had, I'll probably mess it up, I think whole life insurance, or I never know which one's it's whole life. That's the correct one.
Dividend paying, participating whole life insurance.
There you go. So there's the expert. So they had that as part of their investment strategy. And then in the 70s and 80s, it started dipping down to like 1% of the population. And then it fell into oblivion. People forgot, lost, I guess, common sense. Well, it was a high inflation period with high interest, which, what are we living through right now? High inflation and increasing interest. We're not at 23%, but it is going that way. So,
well, let me share this with you. We're going to talk about inflation. So in the early 1980s, so Nelson was a very avid real estate investor.
Yes.
And he owed, in the 1980s, when inflation skyrocketed and interest rates peaked, if you were a prime borrower, and I've never met anybody who's prime, if you're a prime borrower, you were borrowing at 21.5%.
Oh, wow.
Nelson owed $500,000 in debt on his real estate portfolio. Today, that would be 2.6 million.
Okay.
So I just want you to just envision for a moment.
On a MasterCard, basically.
Think about this. Think about having to pay the rates, just the rates that have recently ticked upward. Think about having to do that on $2.6 million.
Ouch.
That created a lot of stress for him. So he knew in an instant that was a problem. And he thought to himself, how do I get myself out of this problem? He already had the solution to the problem right in front of him. It wasn't the problem. The problem was how he was thinking about the problem.
And that's the hardest part, is the mindset. It's very hard. Like, it's right now for me, it's been about 1.5 years with infinite banking, and I'm finally understanding. And my wife's always like, I don't get it, but I kind of trust the process. I'm like, perfect.
That's good.
There's lawyers, there's executives doing it.
Yep.
Well, you're very successful at it. 15 years. If it wasn't working, you would have quit, I hope, after 2 or 3 years. I mean,
yeah,
it's not good.
Believe me, it works really well. And it took Nelson 13 years to get rid of the snakes and dragons, the bankers, as he referred to them as snakes and dragons. and he said, you know what? I had every opportunity to file for bankruptcy.
Yeah.
He had a very prominent attorney who was a joint venture partner of his, who filed an assignment in bankruptcy and threw in the towel and said, listen,
wow,
I'm walking away. So rather than do that, Nelson persevered. And what he did is he began borrowing through policy loans from the life insurance company. And at that time, it was about 8.5% that he was borrowing at.
Still very affordable compared to 21.5.
Big time. And so he said, I'm going to get myself out of this mess. And he began to expand his system of policies by cranking up large premium, participating dividend paying whole life insurance contracts, which begin accumulating cash value immediately. And at 13 years, the snakes and dragons were gone. And him and his wife, Mary, They never visited a commercial bank ever again, except for the convenience of debit.
Yeah, because
All
that.
their cars, all their properties, all of their vacations, all of their personal financial overhead, everything now flowed through their own system. And
Wow.
so that's what it gave rise to the inspiration for Nelson to write the book, Becoming Your Own Banker. And this was meant to serve as a guide for a 10-hour course of study. And that 10-hour course and the book were not written for me.
No.
It was written for you, the general public, because he wanted you to understand a few fundamental truths. The first truth is that your money must reside somewhere. Can you and
Yeah.
I agree on that?
Under your mattress or at a bank somewhere.
Got to reside somewhere. And the second truth is that someone and some organization must perform the banking function as it relates to your needs, meaning that person or that entity has control over a pool of financial value that has to flow at a cost to meet someone else's need.
Yeah.
Well, if you're abdicating the responsibility of banking, and more importantly, the opportunity of banking, if you're abdicating that to someone else, then you're penalizing yourself every financial transaction that you make in your life.
Yeah, there's a huge cost. Like we
Huge.
call it, I was in marketing for many years. It's friction. We call it
Lost opportunity.
Yeah, like even using credit cards. Yes, maybe as a consumer you don't see the cost, but the store is paying 2, 3, whatever percentage each time, and that's tacked on to your buying power. So it adds up after a while. Like think about your cost of living going up. You're spending more and more now for the same things. And again, there's that friction or the lost opportunity cost. And in real estate, the numbers are huge. I mean, I'm in multifamily, vacation homes. So the $2.6 million, I know all about it in mortgages. So and more. I mean, that's a good number. So what's interesting, Jayson, your new book, are you talking about how to recapture some of those debts? Because
Absolutely.
those debts, because that's a big thing.
Most definitely. And I have to share with your community that, you know, having been blessed to have been mentored by Nelson for so many years before
firsthand, wow.
before he passed away in March of 2019, Nelson could not possibly cram all of his wisdom into a 92-page book.
No.
And so what we're doing with the Wealth Without Bay Street book series, so this is the first of a series coming out.
Oh, that's exciting. I like
Isn't
that.
that cool? So there's a new book coming every quarter. And what's amazing about that is it gives Richard and I the opportunity to share with the world all of that additional wisdom and knowledge that Nelson imparted upon us. And so these books will never be, ever be a replacement for Nelson's book, Becoming Your Own Banker, or his book, Building Your Warehouse of Wealth, or The Case for IBC that he co-authored. These Wealth Without Bay Street book series are meant to be an extension. It's meant to expand your knowledge, because Nelson said to us all the time, he said, the more that you see the infinite banking concept, the more you'll see you didn't see.
Yes. Yeah, because the whole you don't know what you don't know. Well, now you're starting to know more and more.
Exactly.
And you guys have been doing it, well, you've been doing it 15 years. So you've seen, never thought about, but So
isn't that good?
Yes. We just flipped. This is kind of
I know, that was weird. Yeah, the screen just kind of flipped over the video. That's
you go. Let's flip again.
You know, I guess what I would share with folks is that if you desire, right, because it all begins with desire. So if you desire some improvement in whatever it is that you're doing financially, or whatever it is that you're thinking about doing financially, everything begins with that desire. And once you have and possess that desire, then you have to realize that you're already allocating 100% of your financial resources are already allocated to wherever you want those resources to go. So if you think to yourself, well, gosh, where am I going to find the capital to start this process? Isn't it true that at present, all of your capital, your money is flowing through the books of someone else's bank?
Oh yeah, it's all
It's
tied up.
it's because you're permitting that to happen.
Yeah.
So if you understand that there's a solution to that problem, then you need to reallocate gradually and incrementally those financial resources into your own warehouse of wealth. And that happens over a period of time. But you have to have that introspection period to say, I know I desire change in the sense that I want what I'm doing financially to be even better, or I aspire to even bigger and better things financially. Then once you go through that period of introspection, you'll realize you just have to shift your priorities with some of your capital. It's already
Yeah.
there. You just got to change the process of where the money resides, because we agreed that your money must reside somewhere. So why not change where it resides? And that change is inside of an entity that you own, that you control, that you can borrow against on demand on your terms, and you can truly build your warehouse of wealth by becoming your own banker. It's brilliant.
It really is. And I was reading, I did some further reading. I created a logo for my bank.
I
And I
saw
thought
that.
it,
That is so cool.
oh, thank
That
you.
is so cool.
Because I'm very visual. So I
Yeah.
studied interior design. I like design and things. So I thought, okay, let's create a logo, put some history behind it, and really play the game. It's kind of like Monopoly. So I've been playing Monopoly with buildings. Now I need the bank
Yeah.
and to complete kind of the equation. And now even my kids now are like, oh well, maybe I could invest, and they earn a few $1,000s every year. So I'm like, well, and you're young, let's get some policies going.
Yeah.
And I showed them the graph. After so many years, now you have crazy buying power, which I wish I had at that age. I mean,
No
it's
kidding.
without asking anybody, you just sign it away yourself.
And
So
and
it's amazing.
it really is. And in addition to what you just shared, so people love to. So, for example, when I want to learn something, I'll either pick up a book or I'll go to YouTube.
Yes.
And our channel, Banker's Vault on YouTube, is amazing. Like we
Huge
upload
resource. There's all kinds
huge.
of stories, like people from different backgrounds. Like
Yeah.
anybody can relate. I'm not a lawyer, accountant, or anything, but I've seen ordinary people like myself, and like, whoa, okay, I get it now.
And so that's a great resource. And there's no ticket to entry. All you need is a
Free.
device with an internet connection. And setting about that path of learning without the desire, then no action gets taken. So it has to be the beginning has to be that desire. I want to do something better. I know that something's fundamentally wrong with the financial system out there. I just can't quite put my finger on it. But I know that every time I try to expand my real estate portfolio, my stress and my anxiety levels go through the roof, because I know I got to deal with, bankers and personal guarantees and
Appraisers and
checks and all this other stuff. It's like, look, it's not necessary. You can become your own banker. You just have to catch the process, which means you got to learn about it. You can go to YouTube, Banker's Vault. That channel of ours is amazing. Read Nelson Nash's book, Becoming Your Own Banker. Get your hands on a copy of Canadian's Guide to Wealth Building Without Risk. You're going to love this. This is an 82-page read. And so,
wow, that's an easy read.
yeah, we wrote it. Here's what's cool. So we wrote it with the fundamental rule that we call Toronto to Chicago. So if you were going to get on an airplane in Toronto, by the time the wheels touch down in Chicago, you'll have this book read.
Wow.
And we want it to be ridiculously simple. And once you're in our ecosystem of resources, you'll catch this. And once you catch it, you'll know exactly what to do. And we'll get you connected with the right person on our team. And Francois, you've been through this process. You know that there's absolutely no pressure.
Yeah, that's the best part.
Whatsoever. And I'll just end with this to say that a fatal error in thinking is that this process has something to do with interest rates and something to do with investing.
Which it doesn't.
It doesn't. The process of becoming your own banker is all about how you go about financing the things you need in life, which can certainly include real estate investment.
Yeah, that's one vehicle.
This has
Or
nothing to do with rates, and it has nothing to do with addressing the yield of an investment. It has everything to do with becoming the banker so that you control how you finance those things, and you have all the money flowing back to your system versus flowing away into someone else's. What would you rather have? Think about it.
Control. When I played Monopoly, I always wanted to control the banks.
Yeah.
Oh, there you go.
This process puts you in a position of total control.
I love it. That's amazing. Thank you so much, Jayson.
You're
we'll
welcome.
Have to follow up in a little while for maybe a next step, a little something concrete, maybe back to school, or how to finance your university for kids.
Oh, I love that.
Infinite banking, put examples, get the kids money to work instead of putting it in our ESPs that are a pain. I'm dealing with it. You need like 40 approvals to take out money that's your own money. I'm like, what?
Shocker.
I'm really shocked, unfortunately. I shouldn't be. So
yeah, I'll look forward to that next time. Rather than have aqua fria,
let's do it later.
A nice glass of wine. But cheers to you, my friend. Salud.
Cheers. Salud. Kampai. Hey there, listeners. We hope you enjoyed this latest episode of the Wine and Real Estate Podcast.
Yes, absolutely. You can find us on Instagram. Our handle is wine_and_real estate. So wine and real estate. On Facebook, FL Homes Corp. And you can also find us on our YouTube channel.
Yes, and please make sure to give us a rating, 5 stars, or any comments. We'd love to hear from you. And we love suggestions as well. Cheers.
Yeah, chin chin.